Testing the mic. Mic is good. Perfect, guys. Perfect. Hope all of you guys are doing good. Marco Simo's in the chat. What's good, brother? Mr. Fernie, good morning. Good morning, brother. For me, it's already 7 p.m., so you must be on the other side. Toby in the chat as well. Cowboy. Frequenza saying, I helped the man climb the mountain and found that I had reached the top. Yes, sir. That's a beautiful quote. That's a beautiful quote. Mr. Meme Abdu, good morning, sir. Bob in the chat as well. Tamur, SK, some familiar names. Nefarion, Quat Toy. What's up, brother? Flux, Tim, Dr. Crypto Easy, Tim in Holland. You doing good? Yes, I'm doing good, brother. Reverse, James, Sean. Some newer names, some familiar names. Probably from the public and the private server. But I hope all of you guys are doing good. We got a lot to talk about. You're either hearing me for the third time today or for the first time. Hope Spain is treating you well. Yeah, Spain is beautiful, bro. Today I haven't really been outside that much. Mostly lots of work, but it's beautiful here. The vibes are immaculate. Okay, vibes are good. First live stream, but have been following for a while. Amazing to hear, brother. From couch to crypto, Enrico Fight. Hey, bro. Add ETH. You in the south of Spain? I'm in an hour under Valencia at the moment. 1 hour under Valencia. Akira, I don't know what to do. Should I study more or just watch live streams all day? No. So what you need, it's a combination, right? Because we just wrapped up the New York stream as well. So for the private members, you guys don't need to particularly, unless you have questions, right, to ask me. You don't need to particularly watch the public streams as well. We're just going to discuss some charts, probably some familiar talks that you guys have already been hearing today. And it's just very important that you get some practice in. So when the markets are not doing anything or nothing is going to be developing in the coming hours, you know, you can backtest using the backtest videos. You can practice more with my YouTube videos, the post-trading analysis, and kind of compare thought processes and note down questions in the VIP questions channels, you know, get feedback from me. Practice, understands the trades that I take, understands how it works, build a fixed system for yourself, depending also on, you know, your availability in the market. So rather more higher time frame ranges, mid time frame ranges, the sweet spot for the range durations, familiarize yourself in the chart with drawing everything. There's lots of work to do. Okay. And then when you're doing that, you know, you can watch the live streams, talk to me also about live price action, see me do things live instead of just a post about it, which obviously will help a lot because that can explain what I do when I'm doing it and while I'm doing it. But it's great to see the people tune in here. Crypto Karma, what are you thinking about the current low time frame pullback on DOT? Yeah, we're gonna dive into it. What happened to Dubai, bro? Oh, I still want to go to Dubai. I've just been busy because I'm also selling my place in Holland, right? So I want to wrap all of that up. And my girl was living at my place, so I had to help her move out because she got her found her own spot right now. So I still want to visit Dubai, and I will visit Dubai in the near future. But first, wrapping everything up, and then you'll see me in Dubai for sure. Now, talking about the price action. Talking about the price action right here. So, I just made a post about it as well, right? I just made a post about it regarding the range on Bitcoin and the overall relationship to the market maker manipulation playbook idea that we first discussed in the beginning of March. And the situation regarding that is that we were watching, if I grab another chart real quick, we were watching this current range. So you had this 6-hour demand, just as a quick refresher for the people that haven't watched the Bitcoin update video. Just as a quick refresher right here, we were watching an actual front run of the very observed level around 73.6-ish K. And we saw that breakdown, and we were watching for a potential accumulation model right here, where we had our initial range low, we had that initial range high, and then we had that deviation 1. Now, at that time, on the lower time frame, you had a beautiful liquidity curve coming straight into that market structure high of your third tap right here. So you had a beautiful return to zone right here, straight towards that high. Now, then we found that customized third tap POI with that customized demand zone for the people that remember. So it's good to analyze back on what you actually did, where we can see right here that on like a 5-minute time frame, from a structure perspective, when you put in that second tap, right here, you were making lower highs and lower lows, and then you broke that back to bullish right there. And then here, this is your structure demand, just following the structure pool, but they got mitigated right there on the lower time frame. So the moment you broke out of it, you already mitigated it, and then you kind of started that slow grind up. So what we then back then did is we put the demand zone below the mitigation, because it's an overall sell to buy on the higher time frame. And because you had that low time for mitigation, that just mitigates the upper section of your structure demand. So when you put below it, and I only do this when it's the only thing there, that's still the unmitigated part. And from there, you also had that liquidity. And then this was our third tap POI. Now, we had that third tap POI, and we were already looking at it, and it's like, well, no, from a time displacement standpoint, tab 2 and tab 3 are very close to each other relative to tab 1 and tab 2. So that was kind of the situation that we were in, where it's like, okay, tab 1 and tab 2 are very big. Tab 2 and tab 3 are very small in timing. Also, tab 3 is higher up. You know, preferably I would have my deviation when you deviate around the tab 1. So kind of an area where you do something like this, deviating that tab 1 POI. And this was a bit higher up, but it was the only thing there. And when you actually observe the price action from this local pullback right here, so when you observe the price action from that local pullback, we know that above this point, there was mostly nothing but liquidity. But then locally from this point towards this low, there was also nothing but liquidity. So because the return to zone and the liquidity curve was that good, we can already get an entry right here on the lower time frame. Right there on the lower time frame, where my entry is actually 79.7 something. So somewhere in here, right, on the back test. Boom, 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 boom. Structure demand. So you can already get an entry right here and target the range high, the high time frame range high, because, well, what is there to hold price down? What is there to make price reject? And you know, later on, we can always come back for a better third tap, but by that point in time, we'll probably already be de-risked, we'll be in a winning position, and then we can always re-enter if needed. So this was that high time frame position right here, okay? This was that high time frame position, and how's your price showing 82K? Because I'm in replay mode, brother. So this was that high time frame position we were talking about. And the moment price kind of pulls back and makes a higher low for the higher high, and you mitigate extreme demand of the move, and with extreme demand, I mean the extreme demand creation in here up until there, and it doesn't really have any good looking demand. If you look at an OBIF, which is just, you know, the valid way of looking at order blocks, you can see, okay, we got a 30-minute demand zone. So if price were to come back for a 30-minute demand zone and do anything, then we can kind of chill the stop loss. Now, we can see here we came back. We swept the liquidity, the extreme liquidity of that move up, but we didn't tap the 30-minute demand zone. And then you kind of started making your way back up. And it took a very long time. Like, it took a very long time. I was actually expecting to get stopped out here. Like, when you kind of see how this developed right here. So price pulled back for that 30-minute demand zone. I was honestly at that point in time not expecting price to hold. Also with the way we came up right there. But that doesn't change the fact that I'm still going to stick to my plan. So the moment we mitigated that demand and you made a new higher high right here, well, there's no reason to go below that low. Okay? Because if you go below that low, there's no demand remaining. There's no reason from a demand perspective that price should take this low right here and then reverse back up. Because there's no demand there. There's no liquidity. There's nothing. There's nothing below this low. So if price is going to take that low, you're also taking this low. So if this low, taking this low equals taking that low, obviously our stop loss is going to get trailed to that lower, that more recent higher low. And because we work in such accurate manners and we have such accurate refined entries, we can then simply put the stop loss below that low, which is at break even. It's at break even. So now you are in a risk-free position that's either going to make you zero money or it's going to make you 19 RR, which is 19%. And everybody that has watched my videos, or at least the most recent video regarding how to turn 1,000 into 100 million, you will know how much 19 RR actually is. That's almost 2 months, right? Almost 2 months worth of price action in returns, in ROI, if you're in that 10% a month. So from there, man, price, bro, higher lows and higher highs. And, you know, we were just building up lows. The highs were barely making new highs when it was supposed to be easy to sweep liquidity, right? Supposed to be easy to sweep liquidity. And we just eventually reversed from there. This was kind of my moment of going to 95K, but the door got smacked down, so to speak. We took that high right here. We took that high on Bitcoin. I'm on Binance right now because I don't want to ruin my Bitcoin Bybit chart. But that ended up sweeping the high where the final take profit of like the lower time frame longs here got triggered, and then we went back lower. But now, right, bring it back to my current Bybit chart in present time, I don't like to look at this as a 1, as a 2, and as a 3, because the time displacement between tap 2 and tap 3 is simply too big, okay? And if you zoom out, because these ranges are valid on a very high time frame, like I think this is even a weekly range, if I'm not mistaken. Yeah, it's even a weekly range, which is crazy. But you can see that, first of all, on the weekly time frame, that range completely disappears. Our initial starting tab right here, like it completely disappears. But even if you go on the 18-hour where you can still see the move, when you see the price action that developed after this low right here, it clearly showcases that this looks more like a structured move with that aggressive back test of the supply zone that we had mapped out, which is simply a lower high for a lower low. And then from there, we actually start our range. But you don't know that at this point in time. You only know that when you start to curl over it and you take that low again. So that range had a total of 3 positions. There were 3 accumulations simply because no distribution was present, and they were all winning positions. And now, where one, the first higher time frame one, it was just a slight profit because only like a 20% TP got triggered before we got stopped at break even. But my overall plan, or I would not say plan, but potential scenario is still intact. The market maker manipulation playbook is still intact, where you could get a rotation back up, right? Accumulate rotation back up to create that high time frame range, take the all-time high, distribute, and dump back lower. That's kind of, in short, the overall market maker manipulation playbook post that I published in the beginning of March. But I highly suggest all of you guys to read that again to kind of refresh all the things that take place regarding it, also with altcoins, this and that, because that was a very in-depth post that you can simply find on my X profile. But I also want to clarify that it does not need to happen, right? We had lots of distributive price action ever since starting this high that we talked about, which was around 60 days. Now, I would prefer to create an even bigger distribution, taking all the liquidity we kind of created from that range high to the current, from this all-time high to the current range high around here, I would love to take that and shoot back up to create a weekly range, right? For that to then eventually be our new high time frame range that distributes us into a bear market. But that's not something that I'm like, okay, this needs to happen. It's something I would like to happen, right? Now we're just going to focus here on the fact that we are still in a swing upwards trend, making higher lows and higher highs. And we're coming into support and we have a range right here. And we're traders and we're simply waiting for our confirmations to get met. Okay. So at the moment, this range, it has some sort of a liquidity trail. But it's not really the highest probability range bound price action, whereas like it's very obvious that you're gonna pop back up. But I was checking here on the left and we did mitigate some demand, even sweeping the liquidity locally while sweeping the liquidity from the demand block itself. And we put in that second tap in the morning, and then we kind of got a we had a low time frame distribution. It's very typical right there. You got a low time frame distribution schematic, and that completed on New York Open, and then you got that reversal. Like we always talk about how New York first move tends to be the fake move. So you get the first move down, and then boom, you get the expansion back up. Now, some people told me that there was some news involved, but I could really care less about any tariff adjustments whatsoever, because price is always leading. Like you'll see what it does based on the price action. So right here, what's now important, that preferably if you want to actually have some acceptance back inside the range, and you don't want this local move up to just be a move up where the purpose is to sweep liquidity, reject from supply, and go lower, you want price to put in a higher low for the higher high here and just spend some time here. Like you just got to spend some time. You don't want to pop back in, sweep liquidity, reject from supply, and then pop back out again. You want to simply get back inside and spend and consolidate some time in here. So locally speaking, you right here, I think it was 15-minute structure that broke back to bullish. Yeah. So right here, you're making lower highs and lower lows. And you SFP'd that 15-minute structure in the beginning on that distribution. And then you SFP'd that low, got that fake out. And right here, you broke it. So currently, that structure is making higher lows and higher highs. And you're in that structure demand POI at the moment. So if price wants to put in a higher low, this is a great place to be putting in a higher low for a higher high. Coming back to that structure demand that got created on the sell to buy of New York. And right here, to confirm that higher low for the higher high, you can simply draw your structure from top to bottom, which is your level 2 structure. And you will realize that you're making a lower high for a lower low from top to bottom, which is level 2. And you can make that red. And then you can say, okay, if we manage to break this high right here, then price will have that rotation back up towards this high right there. And then from there, we can readjust. And you can even dissect that last expansion towards the downside in even more structure, level 3 structure, making lower highs and lower lows. And then you can apply the domino effect. And all of these things have been explained in the mentorship. Obviously, guys, this is lecture 1 regarding market structure. But this is even your lower time frame market structure, not even lower time frame, but lower level market structure, where you can use a domino effect, where if you can break this market structure high, you can go to that market structure high. And if you break that, you can go to that market structure high. So it all starts with breaking that blue high. Okay, that kind of opens the door for the potential of a higher low for the higher high. Now, you do have some demand lower here on the 15 in an order block, in the shape of an order block right there on the 15-minute. So you do also have a reason to put in another low right here to do something like this prior to breaking structure. Maybe even on the lower time frame, you get some sort of a reaccumulation model here. That's a bit low time frame, so not completely sure if I would take it. But it could always happen that following that local downtrend, right here, you have also a low time frame range. This is kind of the extreme demand of the move. So the last significant demand zone prior to taking out that main second tap low. So you could even come here, forming a range on the low time frame with your initial range low, initial range high, deviate that, and then extend that range low to the deviation low, and check for a rejection right there and a slow move down, tapping into this to create like a low time frame model 1 accumulation that could create that higher low for the higher high. And then you could have a pretty nasty scalp on your hands here, where it's something like this, which could be over like around 1 to 6. Probably de-risk at the technical target, especially if it goes against you. But that's simply what we're doing here on the lower time frame. And I would love to at least bounce and go a bit higher prior to potentially retracing. We could also leave this 50-minute demand zone behind and come back for it later as like an extreme demand POI for the higher time frame model 2, because we're still in the price behavior of the second tap on the higher time frame, right? So this is all second tap behavior. This is not third tap. It's not even coming close to the third tap, especially not when you're talking about a weekly potential range. It's all still in the second tap itself. So if the second tap wants to have some follow through, you could go on the lower time frame and you could pre-plan something like this. It could also be a model 2. There are many variants, many opportunities from here, while keeping the market structure in mind as well with, hey, if you break this market structure high, that could kind of cause that domino effect to roll over all the way in the rotation back up towards that high. But I said in that video where it's like, when you see these aggressive moves, if you had a high time frame distribution here on that 3-day that only delivered a 2-tap, I would obviously be more cautious with all these moves, and I would be more focused on redistribution models. But because I kind of like the idea of getting a flush back up before eventually dumping back down again, giving maybe some altcoins some room to run, it's like I'm looking at these aggressive moves in the beginning of the month, and I'm like, how can this be manipulation, right? And that's a mindset lots of traders need to adopt, whereas like you see aggressive moves, and that's not just based on an expectation or a bias. It's just you see an aggressive move, and instead of kind of, walking behind the facts, or I have no idea. I think I just translated a Dutch saying into an English saying, but like instead of like being late to every move, kind of not let your emotions take over, observe price action, and ask yourself, how can this move be manipulation? Like, why are we moving fast here? Well, probably moving fast because we're liquidating other traders and other positions. Okay, so if they're getting liquidated, that causes certain orders to come into the market. Could they absorb these orders? Could there be a higher time frame schematic going on? Why are they making price move in this direction? Markets are only moving because market makers are moving the markets. If a market goes up, it's because market makers are pushing price up. What is the reason of that push up? If the markets are pushing down, they're pushing price down. What's the reason? What's the reason why they're pushing price down? Is it to eventually go back up, or are they just letting it flush? And that's what you need to be able to analyze and, ask yourself in the moment of these aggressive moves, because it can look scary, right? When you're going down here, you don't know that this reversal is gonna happen. But if you're objectively looking at it, you're like, well, we are taking liquidity on the left. This could be the creation of a second tap. So if we're going to get an accumulation model in here, we should come back inside, spend some time, and then later on take our time coming back down. Right? So these are the things you need to ask yourself in the moment instead of becoming fearful of, for whatever reason, when you're getting these fast moves. You want to pre-plan them in advance, mentally prepare for them so you can execute accordingly when the time is right. But right now on Bitcoin, which is obviously going to be very important for any other altcoin, there are many different variants of how this could accumulate. So right now we simply have a 2-tap model. That's it. Like, it's not even like the 2-tap, the second tap is still getting created. So we're speaking very early here. But if this is intended to accumulate, let me say it like that, you could get a model 2 here, right? So price could come up, price could come down, and you could get some sort of a model 2. You could do the exact same. Let me make that, I like red. You could do the exact same, but it could simply come down and create a model 1, tapping into high time frame support, which is this high time frame structure demand. You could be even, and that's in case you come up and you come down slowly, which makes for the easiest models. But let's say price goes up and rejects pretty harsh, right? Let's say you do something like that and you go down right now. Well, price could still come back up. Price could still come back up. On the higher time frame, these tap 2 and tap 3, they're not an actual tap 2 and tap 3. There's no time displacement between them. There's no return to zone between them. There's nothing between them. They're just 2 taps, right? On the higher time frame, they will merge into 1 tap. So if you reject back down here, you have high time frame support below. It could tap that, come back inside, and now spend some time here, and then get that slow retest, where on the higher time frame, this will simply look like a 1, a 2, and a 3. And then you create that good looking return to zone coming into that market structure high. You enter right there. And if you get some sort of an accumulation model in here, yes, the technical target is the range high, but I would run it towards like 103, literally. I would run it towards 103. Otherwise, it could even take that low out one more time here to create a higher time frame model 1. That's also still very possible in that same situation where, you know, you get that fast move down, followed by a move back inside. And obviously, it could also simply invalidate the model and go lower, where you go here and you just start to get a slight bounce and you just break back down. And if that's the case, then we simply have to reevaluate. And the only other demand zone, good looking structure demand that I have on the chart is this area at 64.5-ish, which is also just structure demand the same way here. It's just deeper into the range. And that's why I would like the upper section a bit more and the upper level, because here you're kind of finding your way back inside this old range on the left. Whereas here you're truly holding it as support instead of coming back inside. So I do like this upper idea more. Also, if you break down from here, it's kind of starting to look like imagine getting a run back up. It would start to look like the double top run in 2021. And I don't like those similarities. I would rather just want to have something similar, but a different variant off of it. And not something like the exact same per se. So looking at the accumulation here, and I'm watching the second tap creation. We kind of know what we can expect here. I'm going to set an alert in case price takes that low one more time with the model 1 idea that we just discussed. And besides that, we kind of need to give it a tiny bit of time, because I want to see if we can stay inside of this range and create some acceptance back inside. Because when you look at this range, what it has been doing, and you'll see this all the time, what it has simply been doing is this was trending up, making higher lows and higher highs, and you can see that we were barely able to make new higher highs while creating these lows, showing distributive price behavior. And then you kind of got the reversal back down in a very aggressive fashion. So looking at this range itself as a good looking range, the range barely has any price action in the discount section. So if we have this range and we have the premium section right here and we have the discount section right here, P standing for premium and D for discount, you can see that the most price action has been spent here, and then only in the lower section, we've just had a few taps and then one aggressive move right there. Literally a few taps and one aggressive move. So if you actually want to turn this range into a good looking, high probability range, you simply need to spend some more time here to kind of balance it out. And then you will see also the volume profile start to turn around again, where now the volume profile is in the upper section. You can confirm it with the volume profile. Right here, all the volume is here, and the volume dies off. So there's no volume in this lower section, all the volume in the upper section, and you can see we're rejecting of the volume area low in the supply. So if price is intended to accumulate here and range for a tiny bit longer, which, you know, you can never go wrong saying price will be ranging a bit longer, because that's all that we do this cycle: range, 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 expansion, and then another range, range, range. Then now Nice. My mouse just stopped working, and now we're back. I don't know what that is. That mouse is glitching, but you want to spend some more time in this area, in this discount area, and I preferably want to get a move up and then spend some more time here, right? Do something like that to create the higher time frame third tap eventually. Let's keep that high on the chart for now. Alert is there. Alert is also there. Yeah. So obviously when Bitcoin is accumulating here, that's when you also want to look at certain altcoins and see like if they're accumulating in a similar fashion as Bitcoin, to see if maybe if Bitcoin doesn't have the highest probability model, but you do technically speaking have a valid model, you can take the trade on the altcoin in confluence with Bitcoin because the altcoin simply is showcasing the better looking model. So right here, Doge finally took that low. Thank God. Like that opens the doors to a lot of possibilities. But you can see right here that Doge has a range with your tab 1 and your tab 2. And we still have some unmitigated demand below, but it's a great way. It's great that we took that low because it just opens the doors for future accumulations in the making. And XRP also has something similar. Now, I want to immediately make it clear. If XRP were to accumulate here, my max target would be a new all-time high. And I would actually prefer it if from there you could go over into a distribution. But besides that, that's more for the future. You do have your range here. So price SFP your market structure low. So you were going up here, making higher lows and higher highs. Now, that was kind of a PO3, but that's besides the point. From there, you had a massive liquidation right there. SFP that market structure low. So it's not a market structure break, but you can still use it for your market structure pool. And then you can see the lower high for the lower low that immediately went over into a range. And you're currently coming back inside right here. So you can see just like when Bitcoin is trying to find acceptance, this is also creating a second tap. And it's now in the early stages of that creation of the second tap. Okay. Yeah. With some low time frame accumulation models right there. So you got Doge, you got XRP. Sol finally triggered the I gotta sneeze. Oi. Oh, God damn. But so yeah, Sol finally completed the high time frame macro distribution. So I'm very happy that finally played out. That took a minute, but I got this 3-day demand chain right here, which is basically a demand chain. What I mean with that is that you have this 3-day order block that created that 3-day order block. Got some inducement right there with lows building up above it that you can sweep coming into it. And below this block, you truly have nothing. So if you lose this demand chain, I have nothing till around $50. And from there, you get some more higher time frame structure demand, and that's it, honestly. So it's either this demand chain, or it's $50, or it's just zero. But yeah, even though this distribution completed itself, guys, something that took so long to create and so long to play out, and it's so aggressive, this is not going to reverse in a single day. Even if this is intended to reverse, bro, it's going to take hundreds of days, most likely, if I had to give an estimation. So just chilling here, being patient, following local price action. You're rejecting from this local supply here. You got some more supply levels above. And you're simply going to wait for the high probability model to present itself. There's no current range entry. There is It's very early. It's very early at the moment. So we got to give it some time to wait for the next range and trade it from there. Arthur asking what will be a good entry for the short on Sol. My brother, you You missed a lot of shorts, Mike G. You're a bit late. We were shorting at we were looking for shorts at 260. Oh, Gisa is saying it. It's yeah, you're a bit late, but you just swept the range low, brother. You got to give it some time. Wait for the next high probability model. And then besides that, ETH tapped into some support, but man, ETH is so underperforming. It is absolutely crazy. Okay, it's absolutely crazy. So I also don't really have that much to say about ETH. I got some key supply here. We lost that range. Got some key supply right there. Got some key demand below, which is just high time frame structure demand right here. Following this pullback with the expansion, leaving the fair value gap. You can see it here very clear on the 3-day. Boom, pullback, expansion, leaving behind some demand. But for some reason, that demand, it kind of reminds me of this demand right here. So you have this demand, and below it, you have nothing but liquidity. And you have this demand, and below it, you have nothing but liquidity. So I'm not that big of a fan of it. Okay, but we'll see. ETH is just, you gotta wait for the next range and just literally wait for your confirmations and be patient with it, because there are better charts out there. Because for example, you have SHIB right here. So we got SHIB, who is potentially accumulating here as a Model 1 accumulation. We have Stellar with a second tap. We have AVAX. And we have SUI. These are my main pairs. SHIB is actually a pretty nice pair right here, where is the only pair that could have a high time frame accumulation already taking place. So right here, you got something like this. There are reasons to go lower. It's just that the stop loss will be so big, right? Like the stop loss is like 10%, bro. That's crazy. A 10% stop loss. But it is technically valid. What would that even be? Because you're getting that reconfirmation there. What would that even be? Such a high time frame. Yeah. Let me open my exchanges either way on my own phone. I'm currently monitorless, guys. I'm monitorless. But SHIB is truly one of the only pairs that is showcasing me signs of a high time frame accumulation. So we have our 1, we have our 2, we have our 3. And right here, we rejected from supply. And besides that, we don't have that much. And we're creating a nice bottom here. We're creating a pretty decent bottom while breaking structure. So it's more of a swing position, I would say. But if you want to risk it, then this is a valid entry. It's just a very high time frame model, right? For a 1 to 5. That's kind of the problem here. That's the only problem. But I'm liking this bars pattern. I'm liking the bars pattern right here. Right there. Like, this is nice. Oh. that's good. And it could be, what this kind of reminds me of is that it could be a CRV situation. I talked about this today. But this could be a CRV situation. And what I mean with that is that CRV right here, when Bitcoin was not really showcasing signs of strength, CRV was the only pair that had a high probability accumulation schematic. Now, I wouldn't say Bitcoin wasn't showing signs of strength, but CRV was already confirming a high probability accumulation model prior to Bitcoin being very good looking. And then while Bitcoin did not complete the high time frame model, CRV, as the only pair having a confirmed high probability accumulation, did complete it. Right? So CRV did complete it while Bitcoin didn't, and only because this itself was a high probability schematic. And that's kind of the vibe I'm getting with SHIB here, where like this is a high time frame model right here with, you came into the demand, you get your level 2 break of structure confirmation. It's a 1 to 5 on the high time frame. And it's valid, but Bitcoin is like in its early stages. You know what I mean? So that's what you kind of have to see for yourself. I would definitely keep my stop above the main point. Like treat it as a swinger. Like do something like this. Right here. The reason why you cannot put it below is because you still have demand here that you did not mitigate. Otherwise, you could technically keep it below there. And then this is kind of the setup that you're trying to trade for a 1 to 5. Like you can get a 1 to 5 on a lower time frame, but if you want to have the only resistance there is kind of the supply in this pivot point, but then that's also it. Right here. And that can stay lower, indeed. Boom. Still below the volume profile, but I talked about it today where it's like you reject from the supply. If you get some sort of a level 2 break of structure confirmation, that can be your sign, because that will mean that you're going to get a rotation back up to here. And then from there, there's not that much up there. But what stands out the most to me here is like, yes, you got your break of structure here, the level 2 break of structure. But it's mostly the bars pattern. Look at that. Like this is a very nice bars pattern right there. Taking these lows. That's very nice. Yeah. For a spot buy, it can be 51%. Oh yeah, for sure. The 1 to 5 can also be traded on spot, right? It doesn't even have to be leverage. It can also be traded on spot, but SHIB is right now the only pair that actually, like all the other pairs are mainly confirming a second tap at the moment, but this is already coming into high time frame support, which this is actually market maker demand. So it's structure demand being backed by this model 2 accumulation that pumped you up. So from a context perspective, it's pretty decent because you are making lower highs and lower lows, get the accumulation, get the pump back up, and you retrace into structure demand, building a high probability model 1 accumulation schematic while Bitcoin could be at support, So in my opinion, it's definitely a valid entry. You just have to be aware that if you tend to notice that you are vulnerable to market movements and you switch biases extremely quick, like do you want to take a 1 to 5 setup Or do you want to enter on spot when you just got traumatized by spot? Because there's some people that truly spot is absolutely fucking them up. I notice it in the server. People get a spot position and they can't stop thinking about the markets because they're over obsessed with their spot position. And those people rather should just be trading leverage, compound their gains over time with the weekly and the monthly profit goals, than be involved and have skin in the game in the markets as a whole, because it just messes with them. But if you're like, hey, I want to be involved towards the upside, I want to trade a high time frame model, I like this 1 to 5, this is your setup right here. You're entering on the level 2 breakup structure in conflict with the bars pattern prior to getting your level 1. But it is, you got to keep in mind, it is one of the only pairs at the moment. It's truly one of the only pairs that is accumulating. All the other pairs I showed you right here, you have XLM, 2-tab model, you have AVAX, 2-tab model, you have Caspa right here, 2-tab model, and Atom on the macro time frame, looking to get involved here as well. Could be a macro model 1. I haven't publicly talked about Atom yet, but yeah, this is a pretty crazy chart as well, right here on Atom, because you have, this is the entire, like, what you're seeing here is June 2022. So this has been going on for 1,000 days, and this is a high time frame, high probability model 1 accumulation schematic, where it's even, you have the range inefficiency. So you have a return to zone, plus there's no price action here in the upper section. It kind of reminds me of XRP when we absolutely nailed that 500, like for us it was like 100% move to the technical target, but it was similar on XRP when you had an accumulation model. And you also had the return to zone with the range inefficiency. And we're kind of seeing something similar here, but it's such a high time frame that I'm like, I don't know what the Cosmos, what is Cosmos ecosystem, right? Yeah, Atom I think is Cosmos. But bro, if you're gonna get a relief move up, I think this could definitely squeeze to the technical target of 17.3. And your main breaker structure, right, is obviously this market structure high here. So you got one resistance POI right here. You're making lower highs and lower lows. This is your market structure high. Like if you can break that market structure high, that should technically confirm the rotation back up towards, 17. If you can break it. Because right here, you also got some structure supply that got created on it. So this is truly a key POI. If you can break it and then get some confluence and confirmations for the higher low, for the higher high right there, like that's your trade. That's like, bro, that's an amazing spot opportunity. While also, bro, if you get any low time frame leverage confirmations, that can be a massive trade in the making, like an absolute massive trade. Oh, bro, I think my plugin for my laptop is like messed up because it says plugged in, not plugged in, plugged in, not plugged in. That's Bitcoin going up right there. So you can see Atom at the moment, right? You can see Atom at the moment back testing this 6-hour structure demand, and you're kind of getting the move up right now. You also leave behind some more local liquidity right there. So we're going to see, right? We're going to see right here. This could also be the test. If you know, you know, right? If you know, you know. This could be the test, the actual test. This could be the actual test where you break your structure right here. Yeah. It kind of has to do with Bitcoin here. Yeah. But that's what I'm saying, right? That's why I would love a move up on Bitcoin like that to kind of get these relief moves on these altcoins that could get relief rallies back up. Also Caspa, you know, in a high probability range environment here, which are all like 150% to 100% moves. What's even something like this? Oh. It's crazy. I think I would rather do this on spot, but the potential is there, you know. This is what you want to break through, though. Currently SFP, but can you kind of temporary? Give me 1 second, guys. 1 second. Okay. So that's kind of what I'm eyeing here, you know? It's like I'm seeing Atom right here. I'm seeing Shib. I'm like, oh Lord. Have mercy. Mouse! Okay. It has been going on all day. There's something wrong with my import thing. But yeah, that's kind of obviously in confluence with my views on the market, where I'm like, man, I'm seeing the potential, right? I'm seeing the potential right here. Just a question of, are we gonna get those relief moves back up? You know, that's the biggest thing right now. And obviously Bitcoin is king, right? Bitcoin is king, but it is nice that in confluence with Bitcoin, you kind of have these pairs showcasing signs of a potential accumulation. I think DOT is also on the third tab. Yeah, so DOT, I posted about DOT as well. And DOT right here actually has a DOT swept the macro liquidity right here. Macro liquidity. So if you believe in DOT, now DOT itself doesn't really do that much, but you are SFPing the liquidity back from August 2020. You know, you're taking out all these lows. And you can see here in general, every single time that the market had a rally, you can see DOD rallying with it. It's kind of a coin that doesn't do that much, but it rallies with it. And it kind of finds its base around here. So I'm like, hey, if you're going to get another rally, and you're taking this main point, like, could you get a move like that, just like the other 2 times, you know? It's purely from a technical standpoint, because I don't believe DOT does anything anymore. So you got to keep that in the back of your mind. It is, I think, fundamentally dead. I don't know exactly. I'm not up to date. But yeah, at the same time, you could be forming a high probability model on accumulation here with your range just like this right here. And a 1 and a 2 and a 3. It's just a very steep third tap, so you got to be careful with it. You know, you got to be careful with it. Yeah. Indeed. Also not really a breaker structure somewhere back inside yet. So that's the down part of DOT. Did you enter spot on Caspa? No, I did not enter any spot on Caspa. But I am looking for a leverage position if it allows it. Bob, I manifested thinking the trade shift and it happened. Now you got to execute it, right? What do you think of the weekend liquidity of supply on Biddy? I would love to take it out. But we'll see, right? We got to break the structure first. That's our most local structure, like we just talked about. We are currently SFPing it. So that's job 1. That is job 1. $50% for spot. Yeah. I'll rather leverage trade it though, but you can spot trade it if that's more calm to you, right? But you know, to wrap up the ideas on the market right here, because I have to head out soon. Price had a lots of distributive price action at the highs right there. Okay, we're currently coming back down, and there is the potential that we come back up with the sole purpose of creating a higher time frame distribution. Does that need to happen? No. Could it happen? Yes, because swing structure is still up and we're leaving buy side liquidity above while showing some signs of exhaustion towards the downside right now. We're going to wait for this to give us more data to trade potential accumulations. If it does, we'll be entering on it. Right now, we're still in the territorium of our second tap. At the same time that Bitcoin is ranging in here, we're going to watch altcoins to see how those models develop, where Atom and SHIB are actually almost confirming third taps, whereas other pairs are only creating second taps at the moment. So these are pairs you need to watch out for and need to have on your charts. Always do anything and any move with proper risk management, which is the most important. And obviously, if we decide to correct here, then alts are going to correct with it. It's a trade you take with Bitcoin. So preferably, the best entries will be when Bitcoin is confirming it, and then you decide to take it on an altcoin because it simply looks better, okay? But those are kind of my views on the market, where it's like, I'm seeing a range. I'm simply trading the range. You got swing upward structure. You got buy-side liquidity above. You could break down lower. We're currently in the second tap, so I cannot confirm or deny a pivot point at the moment. So we're simply observing lower time frame price action, waiting for our confirmations to get met. Then we're going to execute accordingly, proper risk management, and we'll see from there. Where I would just love it. I would just love it if you got to move up here to create a bigger distribution, because that just means the market maker manipulation playbook is in play, which is just awesome. But doesn't need to happen. Can't be that biased regarding one idea. We're always versatile. It's a sign of a great trader. We simply adapt the data given to us. So if you guys have any questions, you can always ask me on my X profile under my recent post. And I will come back to all of you, or ask me in the server. The link to the Discord is in the description of this video. Also the public Discord. If you have any questions, you can ask me in the public Discord, because I also answer questions in there, here and there. And obviously, if you want to trade the markets live with the community together, because we have an awesome fucking community, then you can join the VIP Discord and make an investment in yourself. Okay? I appreciate all of you guys for tuning in. I'm going to see if I can go more live public this week as well, because I do have the time for it. And I'm going to see you all probably tomorrow. Okay. Peace out, guys.